Hello viewers, now footprint charts. You might have come across them in your charting package. They're becoming more popular these days. They're a relatively new addition to the world of technical analysis in the mainstream. They've been around for a while though. So what exactly are they? How do they work? Well, where do they not work? How can you use them in your trading? All this in this video today. I'm going to pull them to pieces and see whether they can give you that edge in your trading. I'm also going to throw in a few strategy ideas on how you could possibly put them together in your trading world. And also going to round up with a little look whether they can work with Renko. I'm thinking Renko structure, the footprint X-ray vision on the market. Then could the two combinations work? Well, we'll have a quick look as well at the end. So with that, let's get into those footprint charts. So the first question I had about footprint charts was basically, well, what's the point of them? Because surely that's, that information is reflected in the candlestick chart anyway. But actually, if you dig a bit deeper and understand them, then you'll realize why they're a useful addition chart type on its own, for that matter. You've got to think of them as a candlestick chart on steroids, where they are actually pulling out the detail from within the candlestick chart, that battle between the buyers and the sellers, who's more aggressive, who's not, who are the winners there. That's what it's trying to tell you. So it's an X-ray view into the candlestick chart. View it as, an extra tool to give you, possibly an edge in your trading strategy. And as I'm going to point out later in the video, a few ideas around how you can use that like X-ray vision on the candlestick chart to your benefit. But let's first of all pull to pieces what exactly the footprint chart is showing us. So let's look at a live example. We've got crude oil, WTI crude oil here, 5-minute candlestick chart, and you can see I've overlaid the footprint chart on there. Now this is in TradingView. I'm going to go through later what other packages you can find footprint charts on, but specifically these type of charts are showing how much volume was traded at each price level, and basically who is more aggressive, buyers or sellers. So what can we see on here? Well, the green numbers, that's the buyers hitting the ask. The red numbers, the sellers hitting the bid. The delta, well, that's the net difference between buying and selling at each price level. And the total equals how much volume was traded in that candle. So basically it's just showing us a real-time look at who's in control and where volume is concentrated. So let's summarize that quickly again. Green numbers, buyers hitting the ask. Red numbers, sellers hitting the bid. The delta is the net difference between the buyers and the sellers at each price level, and the total, how much volume was traded in that candle. So back to that big question again, why not just use candlestick charts? We've already got all those other volume and bars indicators that we can use, so why bother with footprint charts at all? Well, the candlestick chart has basically told you what happened. A footprint chart tells you why. Two candles might look identical, but one had buyers slamming into the ask and the other had passive flow or even hidden selling. Footprints show aggression, absorption, exhaustion, and volume imbalance, all things a regular chart can't. So if you want more precision in your timing, confirmation, understanding what's going on under the hood, footprint charts can be very useful. So what can we actually use them for? Well, I think you can probably categorize it into 4 different parts. We can confirm breakouts. Is the breakout backed by actual buying or just, for example, a price push? Spot absorption. Is something absorbing all the selling at a level? That could be a reversal coming. Very good for timing your entry and exit, so you could use something like volume clusters and delta shifts to get surgical. Or fourth sort of use, find hidden traps. Delta divergence can warn you when a new high or low is about to reverse. So 4 sort of key uses there of the footprint chart. But in short, if you care about timing and intent, then the footprint chart gives you both. So to the untrained eye, these charts look a little bit messy. Now we're back in our crude oil futures contract 5-minute candlestick chart. As we now know, very good for using the footprint chart on its futures market. All very good. But what about the actual display? It looks a bit messy. How can we get an optimal sort of view set up? This is TradingView. It's going to be similar in other charting packages, which again I said in a few moments we're going to list a few that offer the footprint chart. But once we've added our footprint chart onto the candlestick chart, and you can find that by going to the different chart types. You can see volume, footprint there. You click on that. We want to head to settings, so we can right click on any of the footprint chart there, hit the settings, and you can then see we've got a lot of possible tweaks that we can apply to our chart. Let's just slide that over there. Now we're going to start with the display. Now you've got an option here, cluster or profile. Profile, you might have seen that sort of thing, volume profile before. Actually, I'm going to keep it as the cluster because that's the core view, and I think it's best for seeing the clarity around the bid ask, the delta, the total. There are different types as you can see below there. Now this is the buy and the sell type we've got set up here. If you're newer to the charts, maybe you want to start with delta. You can see what that does to it, or maybe you've got a strategy just around that you could use. We've got the total there, and we've also got a ladder type of view, but I'm going to leave that as the buy and sell for the moment. What about the applying the grading view? Looks nice. I suppose it's like a heat map. The darker either red or green it is, the more relevant. But if we turn that off, we can, it starts just to clear it up a bit. It takes some of the noise out from it, and I think the shading sort of distracts a bit more than it helps, and you want to keep your eyes focused more on the numbers. And importantly, we come down to this area called imbalance, right? It's very important. Set to 300% there. What does that actually mean? Well, we're looking here at the imbalance between the bid-ask volume. 300%, for example, is very strict, only shows clear buying and selling domination. If you went to 150, 200%, more sensitive for more frequent signals. My recommendation, stick with the 300% because you want the high confidence signals, for example 3-to-1 buying or selling. So if you hear that 3-to-1, 2-to-1, you now know what that means. That's the imbalance. We've got the 300% set there, and then we've got this called POC. That's the point of control. It shows the price level with the most volume traded inside that candle, so that's very useful for identifying absorption, control zones, and where price may revisit. We got it colored grey, so we can't really see it that well. For this example, let's just do it yellow to see a bit more clearly. There you go. You can see the point control around the different candlesticks that we got set up there. And then going back up to the top, we got row size. This controls how price levels are grouped per bar. ATR, average true range, that adapts based on volatility, which is good to have there. But you can, if you want, you can set it manually if you want, but I'm going to recommend that you keep the auto ATR 14 on unless you're trading a specific tick size strategy, for example on the oil here, or the Nasdaq 100, the S&P 500 for example. So quick tips then, set clean black or dark background, or white as you can see there, make it nice and crisp. Keep font size medium or large for fast scanning. Also limit the overlays, avoid RSI, MACD or other indicators unless they are part of your strategy. And another interesting addition, VWAP and session levels. They're also a useful addition, but you know, the takeaway is try and keep it as clean as possible. So the bottom line here is we're not trying to analyze every number, we're scanning for large volume clusters which we would consider potential traps or control zones, strong delta shifts, you know, aggression, you know, in changing sides, and imbalances. For example, you know, we looked at that 300% plus, you know, bid or ask pressure, and absorption, price holding, you know, despite the large volumes. All very good to look out for. So 4 things there, but I suppose also tip, don't stare at this all day. Think of the footprint charts like an X-ray, turn them on when you're near a key level and use them to confirm who's really in control. So you're now asking where they do not work, you know, the footprint charts. Now where they do work very well are futures markets, equities, US equities for example, very liquid ones, and cryptocurrencies. Basically those that actually have, you know, very good quality volume data. So on the flip side, where they don't work, Forex, you know, obviously there's futures in Forex, so that's okay, but basic Forex, if anyone tells you, you know, there's volume there, remember it's an interbank market, there isn't, so they're not going to work very well on Forex. Illiquid stocks, sometimes very difficult there, or higher time frames. You know, it's really just a nice to have then, it doesn't really show you much. So in terms of the ideal time frame, I think it's about 1 minute to 5 minutes. So we're really focused in on the short term with these type of chart types. So where can you get your hands on footprint charts? What charting packages are available? Well, we've been using TradingView, others, Sierra Chart, ATAS, Bookmap, Jigsaw Trading, Quant Tower, Ninja Trader, Motive Wave also got some options, but just be aware that, you know, most require exchange grade data, especially for futures. CME is not too expensive, but if you're going to ICE, can be quite costly. So check what's available before you actually dive in. So we're now going to dive into 3 simple strategy setup ideas to get you going in the world of footprint charts. Remember, these are just ideas, play around with them yourselves. Love to hear your thoughts as well in those comments below the video. If you're already using footprint charts, how do you use them? What strategies have you got? Like I said, love to hear your thoughts there. But for now, just 3 basic strategy, simple ideas to get you going. So our first strategy I call the absorption reversal trap. The trap, so the context behind it, used to fade fake breakouts or failed breakdowns at key support or resistance level. So what's happening underneath, to give a bit more detail or clarity around the idea? Well, we are seeing heavy selling pressure, for example big red numbers on the bid side, and a strong negative delta, meaning sellers are aggressively hitting the bid, but price doesn't actually move lower. And why is that? Because a big buyer is absorbing all the selling. They're quietly building a long position. So let's look at a possible long and short trade scenario. So the ideal scenario for a long trade, the price falls into a known support level. So very key to understand the price, you know, numbers you're at, the psychological levels, the round numbers, those sort of things. Important key levels, whether it's Fibonacci, pivot points. Big bid size volume appears, the red numbers near the low. Delta is strongly negative, e.g. minus 800, showing heavy selling pressure, but price doesn't break. It holds or wicks slightly below. The next candle, green numbers start showing, you know, the ask volume and delta shift. So the entry for the long, once the next candle closes above the absorption zone, it's the buyers taking control. The stop just below the lowest price in the absorption candle, and the target, first target, is the VWAP. You can see we've added on the VWAP to our chart there as our target. Second target could be prior structure high. swing high or breakout level. You can see very quickly in this example back on the crude oil 5 minute, the blue line there is the VWAP, and the green line there, that is just the first VWAP band, so you can use that in your strategy idea as well. But the VWAP, the blue one, the main one, that would be our target. So what about to the downside, the short trade? Well, it's just the flip. Price rallies into resistance, large green arse volume slams the highs. Delta, highly positive, for example, plus 950. Price stalls or reverses, and then the next candle, red bid volume, shows up, and short flip. Also listed some indicators there you could pair this up with. We just looked at the VWAP lines added on there. You could also use RSI divergence or candle wicks and volume clusters. So strategy 2, delta divergence reversal. The idea behind this, catching exhaustion at the tail end of a trend or stop run. What's happening underneath the hood? Price is making new highs or lows, but the delta is getting weaker. This tells you the market is running out of fuel, and you're looking for momentum divergence between price and aggressive order flow. So let's look at a possible long short trade scenario. So for our long trade, the ideal setup, catching a bottom, price makes a new low, delta is less negative than on the previous push down. For example, first low delta is minus 1000, the second one minus 250. Total volume is unchanged or lower, and the footprint shows less selling effort. Price is being pushed but no commitment. So the entry for the long, the candle closes bullish above the divergence low. Confirmation the buyer stepping in. The stop just below the lowest low, and the target, the first for first target, range mid or VWAP, second range high or swing high. Let's quickly look at the short trade scenario. So to the downside, price makes new high, delta is less positive than the last high, ask volume dries up, red bid volume begins to appear, and short on the reversal candle. Now also put in here, like in the first strategy, best indicators to pair with: RSI divergence, volume profile, watch if a breakout failed to auction higher, but also just chucking in the start of ideas around the Renko chart because of its clean structure. Would be very useful here as well after divergence for confirmation. So our last strategy idea to put together, called the imbalance breakout. The idea behind it, catching explosive momentum moves out of tight consolidation. Remember the time frames we're using, we're going to have to be pretty quick on this one. What's going on under the hood? The market is coiled, volume builds in a tight range, and suddenly aggressive buyers or sellers jump in, creating a volume imbalance at the top or bottom of the bar. These are real initiative orders, just not passive fills. So that's what we're looking for. Let's have a look at a long and short scenario. For our potential long imbalance breakout trade, price coils under resistance, multiple candles show volume building, for example over 1000 per bar. A breakout candle forms, breaking that down, ask volume, green explodes at higher prices, the delta spikes strongly positive, plus 850 or more. A 3-to-1, 4-to-1 volume imbalance forms near the top of a candle. Candles close above the range and breakout confirmed, so the entry to go long at close of breakout bar will pull back to base, and the stop just below the breakout base. That's the last high before the breakout, and the target that you could use maybe for the first 1.5 times the ATR, or second a measured move from the range height. And the short trade, price coils above support, bid volume slams, that's red, delta spikes negatively, range breaks lower, enter short on the breakout. Now you can use these indicators as well: ATR breakout trigger, VWAP if breakout is reclaiming it, or something like volume profile if breakout clears low volume node. So to give you an idea of some strategy example values, the absorption bar, for example, these are taken from TradingView, by the way. Delta's minus 950, bid volume 1172, ask volume 222. That shows to me heavy selling at support zone. The reversal bar could be a delta of plus 74, bid volume 130, ask volume 655, showing buyers flip control. And the breakout bar, the delta might read 890, bid volume 320, ask volume 1405, showing a 4-to-1 imbalance, which is a long entry. So the big question for me, and as you all know, I love my Renko charts. Could you use footprint charts with, or the footprint set up with Renko charts? Now, ideally, I think this could work because Renko chart structure clarity and the sort of info that the footprint chart is giving in combination, in tandem, could prove very powerful. I looked on TradingView, couldn't see anything on there. It doesn't default, that only goes to candlestick charts. Couldn't see any custom indicators on there either, so nothing on TradingView. I'm not aware of anything else on any other platform. So if anyone's got anything out there, love to hear from you in the comments. But it's something I'm going to try having a play with, see if I can get it to work, and I'll report back in this space. But for the moment, it's just a sort of idea that, like I said, I'm going to look into. I think it could be of interest. So footprint charts, a very interesting one. Could be intimidating for the newbie to start with, but once you've dived into the detail, they do actually make very good sense. You've got to get the right data as well if you want to make these work. Remember the markets I said they would work on. But if you want to see the clarity, you want to see where the pressure's building, who's faking it, reversals, turning points, timing in for the entry and exits, then it could be a very useful chart addition for you. Love to hear your thoughts as well in the comments. Do you use footprint charts? Have you got any hints and tips to share with us? What sort of strategies do you use? Love to hear from you. And I'm going to be looking more into footprint charts, whether they work with Renko or not, or devise a method to get them to work in Renko. And if you want to learn more about my Renko stuff, over there my shoulder there we've got my new book out, Renko Chart Trading Revolution. Takes you through everything you will ever need to know about Renko trading and more. It puts the whole thing together in a total system, the psychology, the risk, trade management, game theory, automation, the whole lot's in there. Link in the description below. That also got a Renko Trading Masterclass coming up 3rd of July, 3-hour live online webinar. You might be interested in that. I'll put the link below as well. If you've enjoyed today's video, please give us a thumbs up. It'd be very much appreciated. Give it a hit on the subscribe and bell buttons to receive future notifications of other content I'm going to be producing just like this. So thank you for joining me, and hope to see you in the next video.